Hello, everyone, and welcome to a new session with Rights and Responsibilities Awareness Initiative. Today, we are lucky to have Megan Dislip and Ingrid Barrett from Libro Credit Union to talk to us about a very important topic, which is loans you don't want. Thank you, Megan and Ingrid, for being here with us today.
Thank you very much, Heatham. We're thrilled to be here today to talk about this critical message on loans you don't want. We're here as part of a series called Each One Teach One, which is offered by financial institutions to go out in the community and increase financial literacy. So although we're here, we're Libro employees, we're not here to sell you anything about Libro today. Our purpose is based on education. So my name is Megan Deslip, and I'm an investment specialist with Libro.
And my name is Ingrid Parrott, and I am a small business specialist with Libro.
Today, for loans you don't want, Ingrid's going to start with a small script of a challenging situation in which she needs access to money quickly. And she's going to talk about what that experience looks like with taking on what's considered a bad loan. Then we're going to go through showing what are preferred and non-preferred loans and what you can do if you find yourself in a challenging situation.
I'll take it away. Okay, so for this scenario, my name is going to be Jasmine, and yeah, essentially what Megan just said, presenting a scenario of how I got into a bad loan. So I just needed a little help. Rent was due and my paycheck wasn't going to make it. I Googled fast cash and there it was. Easy, instant, a payday loan. $500 in my account within hours, and I thought I had figured it out. But then payday came. The loan plus the $75 fee hit. I couldn't afford groceries, so I reborrowed. Then again, and it's been 2 months. I paid $375 in fees, and I still owe most of the loan. How is that even legal? I'm avoiding my phone. It's constant texts from the loan company. I feel like I'm drowning. I didn't tell anyone because I'm so embarrassed. I've paid almost double what I borrowed and I'm still behind. I'm afraid to tell my landlord I might be late again. I feel like this cycle is never going to end. I wish I had known about other options. I thought I was out of choices. I didn't know where to turn. If I could go back, I would ask for help and real help.
Excellent. Thank you for sharing that story, Ingrid. We're now going to talk about specifically some good and bad loans. So what is a loan that you don't want? A loan that has fees or an interest rate that takes advantage of your need for cash and makes it challenging for you to get out of debt. Like Ingrid's situation, where she paid over $375 in fees and still owed the same amount on the loan. That's drowning her in a cycle of debt and is not a loan situation that you want. So what's a good loan? A good loan is a loan that you take from a bank or a credit union. And what's a bad loan? A few examples are payday loans, pawn shop loans, and credit card cash advances. And we're going to dive into what those mean.
So the payday loans, similar to the scenario that I presented, so payday lenders can charge anywhere from $15 to $17 per $100 borrowed. So if you are not going to be paying back your loan within 62 days, you would be charged 30% interest on the outstanding amount. The pawn shop loans. So these are pretty interesting. So you would bring an item into a pawn shop. They would appraise your item. The appraisals are 30 to 50% of the resale value. So that can be as low as 10 to 30% of what you paid for the item. The interest rates for pawn shop loans can be as high as 300%. And then for the credit card cash advance loans, these are an expensive way to borrow money on a credit card. A minimum of 20% interest will start the day that you take the cash advance. So the cash advance fee, this varies from credit card company to credit card company. So your card issuer will often charge a cash advance fee, which is typically a percentage of the total amount. So 3 to 5% of the total amount of each cash advance you request. So every time you request one. So for example, a $250 cash advance with a 5% fee would cost you $12.50.
Next, let's talk about what these interest rates and fees actually mean. So on a typical loan from a bank or credit union, there's a couple different fee structures you could encounter. So that's what the first two are referring to. One could be based on prime rate, which varies from time to time and is currently about 5%. One could be a short-term bank loan, which vary in interest rate from 6 to 18% on average, keeping in mind all these fees vary per financial institution. Credit card interest rates can end up around 20 to 25%. And you see pawn shop and payday loans have outrageous interest rates. These are what happens when fees are actually calculated into the interest rate as well. So I know I've seen some fancy billboards that are like, you can borrow $100 for only $20. And they're not calculating in what you're actually going to pay in fees if that loan's not paid back within a short period of time. And long term, for pawn shop loans, people pay typically about 120 to 300%, and payday loans can be up to 440%. This is how you get trapped in a cycle of debt. To show you what this looks like dollar-wise, if you have a typical line of credit at 5% and you borrow $1,000 for a month, you'd pay $4.17. The next three show different credit card interest rates. So if you have a low interest credit card at 14%, you pay $11.67. If you had a higher interest credit card or a typical credit card at 20 to 24%, you'd pay about $16 to $20 for that month. A pawn shop loan at 30% would cost you about $25, and a payday loan at an undetermined interest rate up to that 400% could cost you $150 to $170 to borrow $1,000 for 1 month. That adds up so much.
So when we're looking at repayment terms for these bank loans, payday loans, and pawn shops, a few tips about these. So please understand the contract before you sign. Really go through the fine print, because once you signed, you're locked into that contract. Pay attention to when your first payment is due. When is the late payment penalty, or what is, sorry, and what fees would apply for this loan. Also, to keep in mind, what is the total cost of the loan, including the fees and the interest? Because I think most of the time we see the big amount of the loan, but not exactly thinking about the full amount, including the fees and interest. So important to keep that in mind. A little note regarding debt collection agencies. So if a loan does move into debt collection, Canada has strict rules that govern debt collectors. You must be treated in a fair way and not intimidated. So they cannot talk to you or your family or neighbors without your permission. So if that scenario is happening or happens in the future, please keep these rules in mind and make some notes if these things are happening to bring to contact, maybe with CRA. I'm not exactly sure where that would go, but speak with your financial institution and possibly they can aid you in that area. And then another slide just regarding other sources of loans instead of getting a loan from a pawn shop or payday loan or cash advance. So could be from a helpful family member, generous friends, or questionable business people. Um, as as we noted in the slide before, if there's a contract with a business person, please make sure to read over the fine print. This is me as well, sorry. And tips for the other kinds of loans. Make sure you are paying attention to if you will have to pay interest and how much. So say if it's a loan from a family member, ask if there's interest owed as well, because that will impact the total amount of money you're paying for that loan, how much it will be, when the loan is due. So say, $1,000 from a family member or a friend. Is that due in a year? Is that due in 6 months? What is the expectation around that? What happens if you cannot pay in time? And be sure to write it down so you have a record that cannot be disputed.
What questions are there?
Thank you, Megan and Ingrid, for this fruitful presentation. A lot of new information, stuff that need to be known by a lot of people. So my question is, if somebody find themselves stuck in a bad loan, what sort of steps they could take to get out of it?
Great question, Heatham. If you're in a bad loan, you are not alone. My first recommendation would be to connect with your local credit union or bank. If your credit has improved, there might be other offers available and you might be able to refinance. So take on a loan with that credit union or bank, which is a much more reputable lender to help pay off your existing bad loan. In the meantime, do your best to avoid taking on more bad debt. Don't use additional high interest loans to pay off your current one, unless that loan has better terms for your future and will allow you to pay back that debt. And then also make sure that you're budgeting and prioritizing, ensuring your essential expenses are covered and maximizing payments towards your bad loan if possible. And then cutting out as many unnecessary expenses as possible, like subscriptions, eating out, drinking coffee out. Those small changes can add up and help you get out of that bad loan.
Thank you so much. So at the end of this session, I would like to express my sincere thanks to Megan and Ingrid for those information. Also, my thanks to Libro Credit Union for supporting RRAI with those information sessions and giving this important information to community. We are all, on behalf of RRAI board of directors, staff, and volunteers, we are so grateful to you ladies and to Libro Credit Union as well.
Thank you very much for having us.
It's a pleasure to be here.
Thank you. And for everyone, just as always, stay safe, stay well, and we are looking forward to see you at another sessions with rights and responsibilities.